Hey traders and investors, it's Serge Berger here. Today we're going to have a look at Whole Foods, a great trading stock, because it's got plenty of followers, of course. It's turned into quite the cult stock over the years, even since topping out in November 2013. Still a ton of people are always talking about it. And of course, it's one of those typical stocks that we see every day where you go shopping, they're just like the iPhones in your pocket every day, just like other tools that we see every single day that we can understand. So it's natural that Whole Foods has a big following. In terms of the price action here, obviously when the stock fell apart here post earnings in May, I remember recording something saying that it's really time to stay away from the stock. If you look at it, very simply, what happened is if you were to use a logarithmic chart, if you're using an algorithmic chart here, you'd see that this trend line here has cleanly snapped back in May when the stock dropped quite big. In the meantime, however, what the stock has done is sort of managed to be able to regain its composure over the past 2 months or so, actually 3 months or so, I should say. And if you look at it closely enough, it's really starting to get interesting and get alongside, at least for a bounce. I'm not saying this is going to be the new greatest long idea. This is really an oversold bounce type of reaction trade, potentially even a tactical long for a couple of weeks. I'm more interested just going for the stock to move back to about the $42, $43 area. Here's why. Okay, so you see the stock made a low here post this big drop off in May, then had this dead cat bounce, which is really what we can refer this to, this stuff here, and then made another lower low, marginal lower low, undercutting the May lows here in July. Ultimately, the stock, however, that lower low came on less momentum, so momentum gave us a higher low. And if you look back just last week, the stock actually gave us this bullish reversal after trying to break lower again. And today, if this sticks, the stock is marginally breaking past this lateral resistance area around 39 and change. Which will also get the stock back above its 50-day moving average, which is this yellow line. If we can get it close back above, say 39, I'm going to call it 39.30, 39.40, something like that, I think the stock has a pretty decent chance of moving into the $42, $43 area over the course of the next few weeks, and it should be a pretty, or it could be a pretty good leverage play versus the broader market, say, than if you were to play, say, the S&P 500 or something like that. Even though, of course, Whole Foods and the S&P 500 are not one and the same. It just, from a momentum perspective, oversold bounces tend to see a lot of correlation between markets, stocks. In other words, if you get an oversold bounce, most things will bounce. So that's an interesting idea and alongside here from Whole Foods from a trading perspective. Hope it makes sense. If you've got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.